What's up, everyone? We have a pretty relevant rule filing that came out today from the NSCC, which is the National Securities Clearing Corporation, a major agency that oversees the markets relating to things like settlement and clearing and things like that. I'm going to read you the document or parts of the document, and then afterwards I'm going to go ahead and give you the impact or the potential impact that this could imply for a underlying security. And of course, in this example, we will use AMC as the example. But anyways, essentially, we're going to skip all the introductory matters. We're going to go straight to the purpose. And the purpose of this proposed rule change is to amend the real-time trade submission requirements in NSCC Rule 7 and Procedure 2 to accommodate the member submission and trade recording of certain trades representing transactions from fractional share trading programs. The proposed rule change is discussed in detail below. They give us some background. They give you some insights as to what Rule 7 says, and Rule 7, Section 7 specifically. It requires that trade data submitted to the NSCC for trade recording to be submitted in real time and on a trade-by-trade basis in the form executed without any form of pre-netting of such trades prior to their submission. So, in essence, cleared contract information is then reported out to submitting firms by NSCC's Universal Trade Capture, or UTC system, upon trade comparison and validation. So basically, from an operational perspective, as they say down here in this next paragraph, NSCC is only able to accept trades for clearing in units of full shares. So they can only accept full shares. Now, stocks do not trade on exchanges in units of less than one share, and trades may only be reported to a trade reporting facility in multiples of one share. Some broker-dealers, however, offer programs, as you've all seen in your trading applications, that some tickers you can buy fractional shares on different brokerage apps. And it says here that some broker dealers offer these programs, and they by doing so enable their customers to purchase and sell shares on a fractional basis. These programs vary by broker dealer and may involve the broker dealer using its own capital to purchase and sell a full share and giving its customer the fraction or aggregating customer orders together to form full shares. So there's a lot of stuff going on behind the scenes with your orders and when you're making that initial transaction. There's actually a lot more going on underneath and behind the scenes with all market mechanic and market architectural stuff. And it says here that because NSCC cannot operationally process fractions of shares, members offering these fractional shares and these programs cannot submit certain transactions from fractional share trading programs for clearing. So that could be a big problem. So trades in fractional shares may be reported to a trade reporting facility in multiples of one share. For fractional shares, this must be done in accordance with certain rounding conventions. NSCC believes that such trades could be similarly aggregated into full shares for submission to NSCC as correspondent clearing transactions, which it gives a super note here that gives a definition of this, and it says the correspondent clearing service allows an NSCC member broker-dealer to use one broker-dealer for an execution and another for clearance. So there you go. So again, one broker-dealer can be used for an execution of a trade, and another can be used for clearance of a trade. So this is how they're going to get around their problem of not being able to settle a full share. So they're going to propose a change, which they do here. So what they're going to do is they're going to revise the rules to allow an exception, of course, to this real-time trade submission requirement for correspondent clearing transaction representing aggregated transactions of fractional shares. So in an example, we say a broker-dealer, we're going to call it broker A, may receive an order from a customer to purchase 6.5 shares of, let's say, AMC. Broker A may route that order to an executing broker, let's call it broker B, to purchase 6.5 shares. Broker B then executes an order to buy 7 shares of ABC Corp, or in this example, AMC. So again, to reiterate, just to give you a summary of where we are, because I know this is kind of confusing. Broker A may get an order for 6.5 shares. Broker A may then route that order to an executing broker for 6.5 shares. Broker B, the executing broker, executes an order to buy 7 shares of AMC on a trading venue such as an exchange, like a lit exchange, or an alternative trading system, which is off exchange. So it can be either or. which only offers trading in full shares. This transaction clears in real time at NSCC with broker B as the buyer versus its contraparty, which would in this case be broker A. So broker B is the one buying them. And broker B would then submit a correspondent clearing transaction to NSCC for 6 shares. This transaction would also clear in real time, and then to accommodate the fractional share, because again, there's 0.5 missing at this point, to accommodate this, broker A would set up a fail to receive of 0.5 shares of AMC versus broker B. And broker B would set up a fail to deliver of 0.5 shares of AMC versus broker A. So this would essentially cancel it out. But that's how they're manipulating it, right? This is all, legal technically, but what they're doing now is they're giving way and allowing for more control, because now you can take that extra share and instead of, creating settlement problems by, holding on to these unsettled fractional shares for so long. Now what they're going to be able to do is they're going to be able to offload them to these correspondent clearing members or transactions, and they're going to clear in real time, and they're going to use it by one side doing a fail to deliver and one side doing a fail to receive. So very noteworthy to bring that up. But this is the legal document. I have a PowerPoint presented that's going to explain this a little bit easier. Let's go ahead and look at that, and it directly relates to the effects that it could have on AMC. But that's it in a nutshell. So implications of this on AMC, or it could be applied to any underlying ticker that, but we're going to use AMC for this example, but it applies to any, ticker per se. So introduction, the NSCC's proposed rule change on fractional share trading impacts stocks like AMC, especially given its popularity with retail investors. Because again, these fractional shares are usually offered to retail through the brokerage, as the filing stated. The following slides explain the key implications. So number one, this could increase the accessibility, obviously, for retail investors. Fractional shares allow more investors to participate in AMC trades. Retail investors with limited funds can purchase partial AMC shares. So with this with this solution, apparently, that the NSCC is coming out with, there may be more of these programs offered to allow fractional share buying for AMC and other stocks, which would in turn create higher retail participation that could lead to increased demand for AMC. Can also impact price volatility, because increased fractional share trading may result in higher trading volumes for AMC, obviously. But higher volumes can cause more significant price swings, especially given AMC's history of volatility. Liquidity improves, price volatility may increase. And what have we seen in the volatility, as we went over yesterday? The options IV is at very low levels, historically speaking, when you're comparing over the last year. So improved liquidity, and also price volatility may increase, which is good if you have options. Now, impact on short squeezes. Retail investors could use fractional shares to increase influence on stock price movements. AMC's prior short squeeze show how collective retail action can drive price. That's what they're saying, but is that the reality? Who knows? I personally think it was institutions driving it, and we were the ones that they were pointing the finger at, but, it could be either one. Fractional shares allow more precise positioning by short sellers also, so keep that in mind too. Continuous net settlement, or CNS benefits. Now, this is benefits for the NSCC. So fractional share trades will be included in NSCC's CNS system. CNS helps manage and net large volumes of transactions, increasing liquidity for AMC. This could be a very, very good thing with increased liquidity. Now, reduced settlement risk and smoother processing of trades will also occur. So it kind of makes you think that they're setting up for something as far as some kind of volatility coming into the market. So I'm not sure what that would be for, if there's some event that they're pricing in or what, but it's just one of those wait and see kind of things. But again, this doesn't just affect AMC, it affects any underlying ticker where a fractional share can be purchased. Now, institutional considerations. Institutional investors may use fractional shares to adjust portfolio precision. We've already seen a large increase in institutional buying, so they may use this new option to, manage their positions more precisely. This could lead to more AMC stock activity from large institutional players, which we've already seen. But however, the rule hasn't been approved yet, so it's very complicated how the timing works with acquiring shares and the legality of it all. So it's just something to keep in mind of. And impact on AMC stock structure. Now, this is, a stretch, but it may consider stock splits or similar actions to cater to retail investors in the event, let's say we do go tits up and they decide to do a split or something else. It could cater to retail is what they're saying, but I don't know if it's going to cater. It's one of those wait and see kind of things. And the fractional share infrastructure encourages companies to adjust stock structures for broader participation. So if anything you can take away from it, it's that the NSCC fractional share rule enhances retail access and liquidity for AMC. It's probably the number one point. And then while there are benefits, AMC also may experience higher volatility due to increased retail participation and obviously the large buying of institutional investors that we've seen lately. So, which may leverage these fractional shares for precise trading. So if they're trying to get precise trading, I mean, what are they going for? We'll have to wait and see. But that just hit my email today, so I wanted to make sure I at least reiterated that and got that out here. So that's basically it. And fractional share trading solution found by the NSCC by essentially using fails to deliver on one side, fails to receive on the other, taking care of that extra half of a share. So we'll have to see the impact on the markets based on this.